Hi, I'm Rob Bishop, CEO of New Hope Group. Today we released our financial results for the year ended 31 July 2025. I'm joined by our CFO, Rebecca Rinaldi, and together we'll walk you through some of the key highlights. Firstly, let's turn to safety. Pleasingly, we have had an ongoing improvement in our 12-month moving average TRIFR, which has decreased from 4.99 to 3.22 at the end of the 2025 financial year. While there's still opportunity for improvement, it's pleasing to see the safety program we put in place during the year have had a positive impact across our sites. Importantly, our TRIFR is now below the 5-year industry average for the New South Wales open cut coal mines. Turning to our operational performance. During the year, we navigated significant wet weather and logistics constraints at our operations in both Queensland and New South Wales. Despite these uncontrollable factors, the group delivered another considerable increase in saleable coal production as we continued to execute our organic growth plans. We delivered group run-of-mine coal production of 16.4 million tonnes, saleable coal production of 10.7 million tonnes, and coal sales of 10.5 million tonnes. All of these metrics were significantly higher than the prior year and within our 2025 financial year guidance ranges. Increased coal production and disciplined cost control have driven a reduction in the group's FOB cash costs from $90 per sales tonne to 82.4 per sales tonne. Despite a softening coal price throughout the 2025 financial year, our low-cost assets remain resilient and continue to generate solid margins through the cycle. I'll now hand over to Rebecca to take you through the financial highlights.
Thanks, Rob. This year we delivered underlying earnings before interest, tax, depreciation and amortisation of $765.8 million. This is a positive result, especially in the context of lower coal prices and a challenging operating environment. Our recorded net profit after tax of $439.4 million represents a 7.7% decrease from the previous year, driven by lower realised pricing, partially offset by increased sales volumes and lower unit cost. The seaborne thermal coal market has been impacted by oversupply, economic uncertainty and a mild winter in Asia, with the Newcastle export coal price hitting a 4-year low during the 2025 financial year. The group achieved an average sales price, including hedging, of $161.4 per sales tonne and an underlying margin of $64.4 per tonne, highlighting our ability to generate margins in a cyclical environment. The business delivered $570.8 million in cash flow from operating activities, which funded further investment in our organic growth pipeline and enabled us to return value to our shareholders through fully franked dividends and the on-market share buyback. On that note, I'm pleased to announce the board have declared a fully franked final dividend for the 2025 financial year of 15 cents per share, which will be paid to our shareholders on October 8. This outcome brings the total dividends for the financial year to 34 cents per ordinary share, all fully franked. At this year's interim result, we announced an on-market share buyback of ordinary shares up to $100 million, which commenced on April 1, 2025. The pace of the buyback has slowed in conjunction with the company's prevailing share price, and as of 31 July 2025, the company had bought back 2.5 million shares at a cost of $9.1 million, or an average price of $3.60 per share. Today, we have also announced the introduction of a dividend reinvestment plan to provide shareholders additional optionality regarding the payment of dividends.
Thanks, Rebecca. The delivery of increased production in the 2025 financial year is a result of continued execution of our growth pipeline, which will see us significantly lift production over the coming years. Our growth pipeline includes New Acland Mine, which is ramping up to becoming a 5 million tonne per annum operation, Bengalla Mine, which now has an output capability of 13.4 million ROM tonnes per annum, and exploration opportunities to the west of the mine, and our minority investment in Malabar Resources Limited, with its Maxwell underground metallurgical coal mine ramping up to 6 million tonnes per annum operation. Looking ahead to the 2026 financial year, we are focused on remaining a resilient, low-cost coal producer and continuing to execute our organic growth plans, which will enable us to continue to deliver shareholder value. I'd like to take this opportunity to thank our dedicated workforce for their contribution and our shareholders for their continued support of New Hope.